You know what? I think people overcomplicate this actually.
And we go live. And when we talk about ecosystems, and this is my personal view of things as well, that generally transferring customers from one of your services to another service is easier as long as it's the same company. But if they enter into partnerships with another company, then the transfer of the users becomes very difficult, right? God knows why. I'm sure there are some reasons. Maybe they did not explore the business case. But for example, if I see my telco app, right, and I see all the deals, millions and millions of users, but those the customers do not go on to those other kind of deals and also. What are your views on building an ecosystem with another party? Like, how to ensure that this migration of customers, the real purpose behind is to bring down the cost of customer acquisition. What are the right ways of going about it? Like, especially when it is beyond your company partnership, third parties and more.
You know what? I think people overcomplicate this actually, and Kelvin and I have spent hours talking about this sort of topic, and I think it comes down ultimately to the value you add when you get together, right? If there's really good value there and you're going to do something that is quite special or unique, or give the customer something that they've already been wanting and couldn't do, then in any walk of life, that sort of works. Like, I mean, you might need to point them in the right direction and do marketing and education, etc. But it's when I see these partnerships and I look at them and go, that's either a stroke of genius or that's just not going to work. Like it's some really out there partnership and I look at it and think, this does not make sense. And I go back, and what I love with Kelvin's partnerships is I talked about daily life journeys. And so he's solving a daily life journey problem, right? There was, without getting into any specifics, there's a customer journey that stops at a point when it could go that much further and it could involve financial services transactions and do that much more on the existing platform if we can work together in the one place where you already have a captive audience, and now we're just going to allow you as the partner to do that much more with them, and we'll be behind the scenes. Like, that's a really value adding service versus the partnerships I see where like it's not clear what the value proposition is. It's not clear who owns the customer. Like, are we going to be fighting for the customer? And I'll tell you something as well, and I know Kelvin spent a lot of time on this. This starts with, are we philosophically aligned around the partnership and what we're looking to achieve? Because I see some scary partnerships right now, particularly in the digital banking space, where I look at it and go, that does not look like a happy marriage. And off the back of Kelvin actually teaching me how to think about this, I now look at those relationships and sort of say, when we're in the formation of those, let's do some disaster planning. And that sounds really dramatic, but we do disaster planning for tech, we do disaster planning for buildings. I like to go through like 5 to 10 scenarios and say, what happens on the day when we have conflict? How are we going to resolve that? Like, how's the decision getting played out? What's our kind of arbitration and escalation process? And that sounds very like formal and boring, but you are going to have conflict, right? If you are moving fast, both companies, and you're doing things that have never been done before, there's going to be times where you have differences of opinion and you want to know how they're going to play out. And so I think I'm kind of straying off the value conversation, but value first, make it something that's part of daily life journeys rather than like this bolt on that nobody wants, or I've got to like go out of my way to want to use this thing, because that makes it a lot more abstract as a product. And the foundation has got to be a strong philosophical bond that you're going in the same direction.
Chris Skinner said that the Chinese banks, the My Bank and the We Bank, are able to bring down the cost of account management or account to the level of 50 cents a year, while for incumbent banks, the amount ranges from $15 up to $50. There was this one interesting TED talk also he gave. Now, as somebody who works day in, day out on the banking and fintech related topics and questions, what do you think are the 4 or 5 technologies that the incumbent banks should take very seriously? I know technology is not the only answer, but having said that, there are some technologies which are very critical for the banks, right? So what are those technologies? And is it really possible for these big banks to actually bring down the cost of account management just like these digital banks have managed to do so?
Yeah, I mean, look, technology is a big component of how you bring down your cost to service, your cost to onboard, data integration. and so on and so on and so forth, right? No doubts about it. If you look at the typical cost-income ratio of a incumbent bank, and I'm talking consumer and small businesses here, technology capex is going to be what, 40-50%, give or take, depending on how you measure it, of your running costs. And then you've got acquisition costs, which is another, I guess, 20-30% of it on your run. So net, and obviously operations, right? So apologies for the pinging. I'm going to turn off my note so that it doesn't turn up here. But yes, so there's a whole bunch of places where you can cut costs, and technology is core to that. And most incumbent banks face a problem with the technology conversation purely because there is so much they already have on their existing stack, right? Migration is painful and it's very, very risky. So for higher level executives who are incentivized on a 2-3 year basis, this almost never worth it taking the risk of a massive migration exercise, which is one of the key things that stop incumbent banks from lowering their cost to serve significantly. But I think that tide is changing because it has now become an existential question. I mean, the fact that something like me exists, and the fact that I have gotten funding to build something like this is a recognition that it is existential in nature. Even if you are incentivized on a 2 to 3 year basis, you cannot escape that conversation any further. It's also a legacy building conversation now. So, sorry, short answer to your question is this. The banks understand the technology side of things. It's going to take a long time to get to the kind of cost to serve that a neobank will have, purely because legacy migration risk is going to be very difficult. But it doesn't stop banks from setting up alternative business models like BaaS, which will create a scalable model that is relatively cheap, because the cost to serve is lower, much lower, and there is very little cost of acquisition, as Darren rightly pointed out. Or like we have done with Hong Kong and Mox, we created our own neobank, right? Where hopefully over time this thing grows as the millennial overtake from a population standpoint versus people who are stuck with incumbent banks. Then maybe Mox becomes the primary bank in Hong Kong versus SCB Hong Kong, right? That could be an outcome. So net, I think it's existential, it's in the works. The banks recognize it. What they're solved for, what they understand is technology. What stops them from adopting technology is short-term incentives. However, there are tweaks to the business model that can cut costs from every other parts of the business. Now, even if a neobank's cost to serve is very low, the cost of acquisition of a neobank is very high, right? Which is why Monzo is still not profitable. Well, Atom is not profitable. The only profitable one is Nubank, right? In Brazil, as far as I can tell. The only other profitable neobank in 18 months is Kakao Bank. And the reason they are profitable is because Kakao is embedded in an ecosystem running what is effectively a BaaS solution.